Welcome to TheoTRADE. This is Don Kaufman. It's February 12th, 2025. We're just a few minutes after the cash close here on this Wednesday afternoon. The S&P's down about 17 handles. The Nasdaq's up. I mean, look, we are still what I would term kind of stuck in the middle with you. I mean, the marketplace is still effectively range bound. It's a range I've been talking about kind of incessantly now for weeks, months even. But I'm going to show you here momentarily, there's just there's a big vulnerability, if you will, in what is being perceived as an absolutely invincible market. I mean, what have you thrown to the marketplace? Well, today, I'm going to start with a hot CPI. CPI comes out today. Markets are actually trading just shy of 6,100, okay? A precipitous drop. It's about a 70 handle drop. You know what's awesome about that though? I'm all the way down to like a 1 day, 1 minute. Look at that. People, I got to tell you, I do love my volatility. This is a drop from literally 6,100 down to, again, 60-40, 60-30, give or take. Again, almost a 70 handle move inside of the S&Ps. But, again, the marketplace rallies right back up. It seems utterly invincible. If you look at the NASDAQ, okay, the drop inside of the NASDAQ, I mean, you're trading basically 850, a moment later, you're actually trading 574. What's 250 points amongst friends? Things get all kinds wild. Invincible. We actually rally all the way back and finish the day inside of the NASDAQ slightly higher. Again, pretty shocking, right? So what's the vulnerability? Now, the vulnerability, it's got to be the bond market. I mean, this is where people start, inflation doesn't matter anymore. Earnings don't matter anymore. Nothing matters anymore. And yet, but it does. It absolutely does. So the bond market is probably the preeminent concern, whether it's bonds, whether it's notes. Okay, look, here's the bottom line. Rather than sit here and, discuss it, incessantly here, the bottom line is the S&Ps are stuck, and they're stuck inside of a range. But interest rates, and this is the 10-year that I'm actually pulling up right now, right? So that's the TNX, the 10-year spiked again. And we're up at about 4.63. Significant move. It's a really significant move, though, to the upside in interest rates. And there's portions of the marketplace, like if you look at XHB, which is home builders, it's like it can't take it anymore. Actually, quite frankly, it took it quite well. I mean, the home builders finished down, but only down by 1.5% today. You would think, home builders are getting killed. I mean, is anything really getting killed in terms of sectors? So on the bottom of my screen, I actually have most of your major ETF products, right? So I'm looking obviously at XHB and XLY, which is, discretionary retail. Honestly, though, XLY, it's such a skewed, and then the industrials are down nominally, and XLU, which is utilities, are down nominally, SMH 0.5%. The point is, everything for the most part bounced back, with the exception of like regional banks. Regional banks kind of got hammered a little bit. If you're kind of curious about why, it's because regional banks are actually long bonds. So if the bond sold off, it's like unrealized losses in there. But that's it. Again, the day itself, the problem, in my opinion here, the day itself of this marketplace, it's another day where everybody feels, again, kind of invincible. And that's the vulnerability is if the bonds continue to sell off, okay, and either threaten lows, break, like 111, this marketplace not only is not going to be invincible, it's going to get pummeled, okay? The bottom line, that is, CPI doesn't matter, this doesn't matter. Well, I'm going to tell you right now, interest rates do matter. And why do interest rates matter? Because everybody thinks to themselves, interest rates don't matter. Doesn't matter anymore, okay? Going to make money in Apple, going to make money in Meta. Meta's now, 16 up days in a row? This might have been day number 17. Well, hell, I can't even keep track anymore because it's Meta. And, they, $100 billion of spending in a year, and they buy it. And again, you get this feeling of invincibility, but interest rates don't matter. I'm going to tell you why interest rates do matter. Because at some point, you start to look at the marketplace, okay? You start to kind of recognize, well, holy crap, if interest rates don't matter, okay? How many of you, I want you to think logically to yourself, how many of you might actually bail out, okay, of individual stocks if, okay, the notes, that's the 10-year, got above like 5%. Come on, we're only a hop, skip, and a jump away from 5%. You can lock in 5% for the next what? For the next 10 years. Because you realize probably like this marketplace might not be long for this world, right? It's, it's not going to be invincible forever. But obtaining like 5% in a 10-year, I don't know about you, but to me, looks pretty damn good at that point. And I don't care what people say about, interest rates, it's going to kill people, it's going to do this, your credit card debt, and there's going to be, I'm not even making that argument. I'm making the simple argument, I don't know, above 5% in a 10-year, okay? I might throw some serious capital in there. I mean, why not? I'll lock up some money, and I do believe that I'm not alone with that particular take. So, the big vulnerability is going to continue to be interest rates, because at some point, it's worthwhile rotating from some of the equity market and some of the risk in the equity market out. Now, there's some earnings in the after hour, okay? I know we have Cisco Systems, okay? That thing actually spiked. The reason I'm bringing it up is I actually have a butterfly that I put on in there. So this is an earnings flip. Look at that crap. Okay, you know what that is? That's 66. You know where we're trading right now? 66. You know what that means? It means winner, chicken dinner. So I'm gonna hit me a fly. The other one that's out after hours with earnings is Hood. Okay, which is Robinhood. Got a position in there, and you know what that is? That's a product that's trading at 62.30. You want to know where my butterfly is? 63 even. Oh, look at this! It's moving to 63 right now. You want to know why I care? Because once again, it's a winner. This one of my favorite strategies is earnings flip. I absolutely love trading it, even if it moves away. Okay, boy, it makes my my trading days that much more interesting. But I want to leave you with a final thought. Okay, and the final thought over here is, as I said to begin with, okay, here's the range that defines everyone. And I'm just going to, okay, supersize this on the screen, okay, kind of zoom in. It's roughly speaking, okay, from this 5,900 to the 6,100, okay? And you're kind of like what I term stuck in the middle with you. Yeah, we're at the upper edge of the range. That doesn't mean a damn thing. But, you're thinking this marketplace is invincible, but you learned otherwise today, okay? It's going to be some exogenous events, some catalysts that's going to rock us, again, outside of the range. But for right now, we're still in it, okay? And moreover, if you take a look at the SPX, okay, the SPX has just shy of a 100-point expected move. And here's the last thing I really want to leave you with on this Wednesday night video is with a 100-point move, 100-point move higher and 100-point move lower, okay, get ready to rumble. You think you saw some volatility today because CPI came out, Jerome Powell, with some testimony, okay, means nothing. And again, the marketplace is telling you literally it means nothing. That's why I would say watch the bonds to actually tip this marketplace off. You see some more sell side activity in that bond market. I'm telling you, these S&Ps, okay, they could very well get rocked. I am going to give you one last kind of opinion piece over here. With the S&Ps, as I said, we have this $100 expected move, and we've basically done nothing this week. As I said, stuck in the middle with you. We trickled a little higher. We backed off today. We rallied back up, did a little dance, made a little love, got down tonight. Okay. I'll give you my real feeling. Not only do we have a lot of volatility packed in, okay, but my real feeling of this range that we're in, okay, I'm kind of inclined to believe that we're going to pop to the upside momentarily, okay, and then drop, right into the lower edge of the range. That is my opinion for right now of the marketplace. And again, that's more opinion than fact in here. The fact is, you have a crap load of volatility ahead of you for the remainder of the week. The fact is, the bonds are getting absolutely rocked out there, and that, people, is your vulnerability in this marketplace. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.